Hello everyone and welcome to your Glassnode video report for week 19, 2023. So Bitcoin has seen an enormous influx of demand for block space, and this has really created quite a bit of congestion actually, and pushed fees to really quite high levels. We've actually seen that the total fee inside some of these blocks is more than the 6.25 BTC block reward. So a very significant influx of demand. It is associated with inscriptions and, the BRC20 token standard and some of these different concepts, which may be a flash in the pan. They may be here to stay. But today we're really going to explore this and look at a series of metrics that help us understand a bit more about what is going on. So congestion and fee pressure are one of these things. It's always been a bit of a debate because on one side you have the Bitcoin security system, which eventually will transition to a fee-only model. And likewise, if it moves towards being a global reserve asset, we can expect fees to rise and likely stay there. Now, the other one is that having high fees makes it more expensive to transact. And this generally creates more incentive for people to move towards things like Lightning Network and to build them out in the first place. So these incentives will play out, and it is going to be a multi-year process as the Lightning Network expands, as different layered scaling solutions evolve. But what we're going to be looking at today is kind of what's happening here and now. And a lot of this has been driven by Ordinal Theory and Inscription. So in case you missed our report on Ordinal Theory, you will find it in the description below. But Ordinal Theory is essentially a protocol that sits on top of Bitcoin. Bitcoin doesn't know anything about Satoshis. All it sees is UTXOs and volumes of Bitcoin transacting, and obviously addresses and blocks and the like. Ordinal Theory is essentially a protocol that sits on top of that and provides a serial number for each Satoshi. So these inscriptions are indeed put onto the chain, but actually assigning an inscription to a particular Satoshi is actually an external protocol to Bitcoin. Bitcoin has no idea that this link between individual Satoshis and inscriptions is taking place. So it's kind of an interesting experiment. It's one of these things that is playing out. There's a lot of debate and discussion that's going on around it. But we're really going to zoom in and look at this from an on-chain activity lens. And we are going to be focusing on a series of dashboards that we've rolled out on this topic. This is essentially why you would pull these tools out, to understand the difference between on-chain activity, and in particular a concept that I'm going to call payload. Because in this instance, we don't have a lot of volume. There's not a lot of BTC flowing around, despite the fact that transactions are at an all-time high. So we're going to be looking at that divergence. So anyway, that's what we're going to get stuck into. As always, give a rate, a share, and a subscribe before we get started. And let's jump right into the analysis. Okay, so the first dashboard we're going to start with, all of these are presets and available inside Studio. So the first one we're going to look at is called the UTXO Set, and you'll find all of these underneath the on-chain activity category for Bitcoin. So the UTXO Set is a really cool dashboard. It's available for everybody on all plans, including free plans. This is really looking at the underlying bones. The UTXOs are the accounting system that Bitcoin utilizes. They're kind of the base building block for all of the metrics that we design in on-chain analytics. So the first one we're looking at here is the number of UTXOs which are created in green, spent in red, and total in blue. Now, what you can see, let's actually just zoom this one in on, let's just go on a 2-year time frame. You can see here that the number destroyed is actually, it's kind of flat. It's within our typical range. But the number of UTXOs created is absolutely tearing higher. So obviously the blue being the total is the net of created and destroyed. And what we're seeing is that the UTXO set in terms of the number of UTXOs on Bitcoin is exploding higher. This is an enormous uplift. So we've seen a lot of activity creating a lot of new UTXOs. Now, for anybody who's not familiar with the term UTXO, you will find a link in the description below. We have an analogy or a description of what they are, comparing them to a gold coin, which is a really nice analogy, a really nice way to just kind of wrap your head around what exactly this, strange abbreviation actually is. So what we're looking at is here is the 30-day growth in the number of UTXOs. And this you can see is the second largest spike we've ever had. There was an appreciable one back here at the 2017 top. You'll see a bit of a theme across many metrics we look at today. And back here in 2015, there was a huge cluster, but really short of this is the second largest growth in the UTXO set we've ever seen. So it is a significant demand inflow. Now, I mentioned before that we're talking about the concept of when we're talking about on-chain activity, we're looking at how alive the Bitcoin network is, how much transactions are taking place, how many blocks, how full are they, these things like this. Now, I'll talk about the concept of payload. If you've got an active address, but it's only sending 15 cents worth of BTC, it's kind of less meaningful in many ways than a address that's moving 1,000 Bitcoin. So the volume is what I'm referring to as the payload. How much weight does that UTXO have? Because a single UTXO can hold $1 billion worth of Bitcoin or 10 cents worth of Bitcoin. It can actually hold both, right? So we're looking at how much volume is there. So what we're looking at here is just the raw settled transaction volume in BTC terms. And you can see we've barely got any uplift. So whilst we have the number of UTXOs, and as you'll soon see, the number of transactions ripping higher, the amount of volume remains historically low. So there's not a lot inside these UTXOs. As a percent of the circulating supply, we can also see a very, very small amount of volume. There's just not that many coins actually moving around the chain. So moving on to the second dashboard, and this is probably the more important one to pay attention to for the moment. This has got a lot of great tools. This is called the on-chain activity dashboard because that is essentially the problem it's trying to solve. We are looking at this from two lenses: activity with no payload, active addresses, transaction counts, things like that. And we're looking at it from the payload perspective, which is how much weight does it carry, or the transaction volume side of the equation. Now, what is quite interesting, you can see here, this is our active addresses. I'm just going to put this onto a 5-year basis. You can see that active addresses is actually falling off. So despite the fact that there's lots of UTXOs, we're actually seeing that the number of addresses that are active at the moment is collapsing lower. Kind of a strange phenomena. If we look at it on the new address momentum, remember this is where we compare the monthly moving average in pink versus the yearly baseline in blue. You can see that we're coming back down towards the yearly baseline. We're not in negative momentum territory, but we are pulling back quite substantially. In many instances, this would be something you say, it's probably not actually the best thing to see. It's not quite as positive as a nice, healthy uptrend in both. We are seeing a reduction in the amount of addresses. Now, similar to our UTXO chart, the number of addresses with a non-zero balance is pushing higher. So what we're seeing is that there is activity happening and it's creating lots of UTXOs, it's creating lots of new addresses, but it's in terms of the amount of activity and how many addresses are actually participating, this is actually being driven by the fact that within these BRC20 token standards, and we'll talk about a bit more about this as we get through this session, but essentially people are using the same address and they're not using many addresses. Now, this is quite an interesting phenomenon. It's something on the order of about 60 to 70% of these transactions are actually using the same address. Now, typically speaking, wallet software doesn't do this. We normally see that wallet software would generate a new address for every Bitcoin transaction. It's very different to account-based chains like Ethereum or Solana, where they use a single address and that is kind of your account. In Bitcoin, addresses are essentially disposable, and really people rarely use, and you actually shouldn't reuse addresses for both security and privacy reasons. So this is kind of an interesting phenomena, and it may actually speak to the fact that there's, the people who are transacting, or a large portion of people who are transacting these BRC20s may actually be coming in with an Ethereum or a Solana mindset and reusing the same address, which really isn't the right way to do things, certainly from a security and a stability standpoint, privacy standpoint. So what we can then see is that, and this is really important, when we look at metrics, here we're looking at our relative activity of small and large entities. So this tool was designed to track large entities, which is looking at the red, small entities in the blue, by comparing the mean and the median of the amount of volume that's moving around. So the mean is typically weighted more towards whales. So we typically see this red curve will show when whales are more active. And when we're looking at more retail dominated markets, the blue will be more dominant, being in the median, which is typically a smaller value. There's a lot more shrimp relative to whales. Note that both are collapsing off a cliff. And this is because these transactions that are on the move have such a tiny payload. Typically we see with inscriptions, they're like 10,000 sats. So whilst there's lots of them, they're moving around very, very little BTC volume. So it's just one of these things. We're trying to really frame up the problem. So now we move on to the transaction space. And transaction counts are at a tearing all-time high, over 440,000 transactions a day. I mean, it leaves the 2017 peak in the dust. So this is by far and away the largest transaction we've ever seen in terms of number mined. And we're actually seeing blocks that have over 4,000 transactions each. So just an unbelievable uptick in transactions. And really what this shows us is that blocks are being filled with lots of very small transactions in terms of their data footprint, basically packing as many high-paying fees into that constrained block space as possible. And they're all paying extraordinary fees, which means it's crowding out any of the larger size transactions. And it's really all these small BRC20 inscriptions. Now, if we look at it on a momentum standpoint, this is a nice way to just kind of ground it, because you can look at transaction counts and say, oh, good, it's up. Is that good? I don't know if that's good. We can use momentum tools, right? Which is, again, just looking at the monthly versus the yearly average to compare these things. And you can see that, I mean, in terms of momentum, it's just extraordinary how much this thing is pushing higher. So there is a stack of activity, but it's not moving around a lot of BTC. It's creating a lot of UTXOs, but it's not using a lot of addresses. It's kind of a funky problem. And to be honest, we haven't actually seen this before. This is quite a unique setup for Bitcoin, but it's one of these things that just requires us to understand the mechanics so we can really interpret these things properly. So now moving into the volume space, right? We touched on this earlier with the UTXO dashboard, but here we are. Volume is just not picking up at all, right? Really confirming what we've seen. We've got two metrics here. This is looking at our transfer volume momentum. This is looking at change adjusted. Now, it's important to note that this heavily inflated volume is largely driven by, sadly, the misbehavior by the FTX Alameda entity. So really, this metric is still recovering. Our yearly is very high because of all those inflated volumes. You can see here that the volume collapsed the day that that particular entity, well, stopped transacting because they blew up. So we are still in the process of repairing this chart. On an entity adjusted basis, you can see we had volume pick up, but it hasn't quite broken above the yearly average. So we're just not there yet in terms of the amount of transaction volume. And we can see a very similar thing by looking at exchange related volume. This is only inflows and outflows to exchanges. Typically, this is where people are changing hands, right? People are buying and selling. Exchanges are kind of the centerpiece of that. We had a bit of an uptick. We got above the yearly, but we haven't really stuck the landing yet. And you've seen this in a couple of different instances. So this is just something to be aware of, right? We have activity, we've got adoption, but it's not carrying much volume. So you can kind of weight that as, it may not be as positive as if all of these things were firing at the same time. So now moving into, the one party who is having an absolutely fantastic week are the miners. So the total transaction fees, this thing here is screaming higher. 625 BTC in fees per day happening at the moment. Just an unbelievable amount. Remember, 900 is what's coming out in the block reward. So, and this is obviously an average over the course of the day, but 620 or 630 BTC per day is just incredible in terms of the amount that's actually being paid out. And really, you can see that this has happened overnight. A true explosion has happened overnight. The mean and the median fee has ripped higher, so we've seen an explosion in the actual amount of fees being paid per transaction. And if we look at it from a Z-score perspective, so for those who aren't familiar, a Z-score is basically a tool that we can normalize things. So obviously the behavior in Bitcoin back in 2013 was somewhat different to today. How do we normalize that across cycles? Well, a Z-score is a nice way to do that. What it's doing is saying, how far have we deviated away from the mean? So the question is, well, which mean, which average do we care about? Because you could do a 4-year average, a 2-year average, an all-time average. And the answer is all of those are applicable. And actually up here, this is our fee revenue Z-score ribbon, which is looking at the 1, the 2, the 3, and the 4-year. That's a bit complex for today. I'll leave the viewers to come back and have a look at that. We're going to focus on these two. And the reason why I focus on these two is they're really going to help us understand why we would care about this particular metric. So the first one is that this is the 2-year mining revenue Z-score. So what we're looking at is how much are miners making from fees. It's a nice, that is already kind of averaged out because you've got the block subsidy that will decline with halvings, and we're just comparing the fees to that particular environment. Now, why do I pick a 2-year? Well, a 2 year, if we're, let's just for, again, we don't know if we're at the end of a bear market. Let's just for argument's sake say that we are. Then the last 2 years is probably bear market behavior. So what do I want to look for? Show me when bear market behavior doesn't really look like bear market behavior anymore. So you'll get these very violent moves, right? As we kind of come out of that regime, the 2 year will fire off. Now you may get some false signals like we did here in 2019. Well, I mean, it was still a powerful rally, but this is comparing to the last 2 years, which was predominantly bear market. So show me when the fees are different to the last 2 years. The 4 year is obviously going to account for the classical Bitcoin 4 year halving cycle. Show me a bit of bull, show me a bit of bear market, and now show me when we're statistically above that average, right? So the average is what's being captured here by the 2 year and the 4 year. They're both useful depending on what you're trying to solve. In this instance, we can see the 2 year is just screaming higher, and the 4 year is also ripping higher back to bull market territory. So the amount of fees being paid is extraordinary, it is meaningful, and it is very, very significant. So, whether this truly does lead to some kind of momentum or it's just a flash in the pan, that's what we're waiting to see. Nevertheless, it is a fairly substantial and worth observing moment in time that's playing out at the moment. Now, just to put a little bit of this into perspective, this particular chart is just a very simple model. We're looking at the average fee paid per block. So every block that gets mined, how many fees are in there? What's the BTC payment worth of fees? Now, I've also used Workbench here using a clever rounding function. What I've essentially put in here, this here is the formula that Satoshi encoded into Bitcoin to define the block subsidy. So you can see in the early days, it's 50 BTC per block. Then it drops down in the first halving to 25. Then it drops down to 12.5. And now we're at 6.25. And in just over, or actually just under a year now, it will be 3.125. So this is actually the Satoshi block reward formula. And in the orange, we can see the average fees paid per block in aggregate, right? How much was the fee reward per block? So obviously when the orange is spiking above the blue line, it's showing that the miners got paid more in fees than they did from the block subsidy. And you can also see that there's 1, 2, 3, 2017, 4, and here we are right now. This is only the 5th time in history where we have seen a period of time where fees inside the block were above that block subsidy. Now, whilst that's very impressive, here's a thing to just bear in mind. The first thing is it's remarkable that this has happened, right? This is significant. And if this turns into a trend that really sticks the landing and we actually see that this is kind of a new normal, then many of the concerns about the security budget will essentially disappear, right? It'd be very hard to argue it when the fees are already outpacing the block subsidy. The second take here is that it's only happened 1, 2, 3, 4, 5. And in the last 4, note that this didn't stick around. This didn't stick around, nor did this, nor did this. So historically, we have not seen this high fee pressure stick around for very long. Now, that doesn't mean that we're not going to be in a higher fee regime than if these things weren't taking place. But it also stands that, typically speaking, we see this kind of influx of demand and then things cool down. So given that we're kind of in such an extraordinary period of time, the higher probability is that this will cool down. And then over the course of the coming months, 6 months, maybe years, we will see whether this particular trend really does have staying power. So the last thing I want to close out on is our Ordinals and Inscriptions dashboard. Now, this one here is essentially trying to understand, okay, we've established that there's lots of activity going on. It's not using very many addresses, and it's not moving a lot of BTC around, but it's creating stacks of UTXOs and lots of transactions and paying huge fees to do so. So if we look at the inscriptions, the number of new ones which are coming in, orange are JPEGs, and this previously dominated, right? This whole screen was orange when we looked at this when it first came out, or when inscriptions first launched. Look at all these text files. These BRC20 tokens are essentially text-based inscriptions, and what we're seeing is that this is just dominating by far and away. You can't even see JPEGs taking place anymore because at these fee levels, it's just non-economical for people to inscribe images. They're just too big on the data footprint, and whilst text files are much, much smaller in terms of their data footprint, they can therefore pay a much, much higher fee rate. You can see that we're over 4.5 million total inscriptions, and you can see that the blue is actually starting to crowd out. The amount of text inscriptions is now crowding out. In fact, in terms of total volume, text inscriptions are now 3.87 million out of that total 4.5. So text has now surpassed JPEGs in terms of the primary inscription type. So truly quite extraordinary. All of these inscriptions have added 9.4 gigabytes to the Bitcoin blockchain since this whole protocol launched. And if we move down into transaction counts, similar chart. I mean, transaction counts, you can see that these things are dominating over 50% of all transfers happening right now on the Bitcoin ledger. So just extraordinary growth. Again, it remains to be seen if this is a long-term event or if it actually sticks the landing, and is it a flash in the pan or something that's going to stick around? We can see that the average transaction size, it ticked much higher when they were JPEGs. The inscriptions were JPEGs, which makes sense. It has fallen significantly now that these are text files. So basically, because the data footprint is so small, we can fit more of these into blocks, or miners can fit more of them into blocks. So the average size of a transaction is actually falling off a cliff. We're down here at near multi-year lows, right? So it's kind of showing that the blocks are extremely dense, full of very small, high-paying fee transactions. So again, it kind of speaks to a serious hype that's happening at the moment. And the last one that I wanted to jump onto, we talked about these, moving on to transaction fees. So you can see here, this is looking at transaction fees, or the total amount paid. All inscriptions since the protocol came live has been 653 BTC. And you can see, I mean, we were at 200 just a couple of weeks ago. Look how much the fees have, I mean, 400 something BTC, or whatever that is, 2/3 has been paid by these text inscriptions, and with the most of it actually happening in the last week or so. So truly extraordinary stuff. Miners are really, I mean, they're having a great time at the moment because they've seen their revenues not quite double, but get pretty close to it. And I mean, it remains to be seen whether this really sticks the landing or if it is a bit of a flash in the pan. So thanks for tuning in for that session, folks. Hopefully you enjoyed actually analyzing things from a on-chain activity standpoint. I will often use this, and I like to split it into the non-payload, addresses, transaction counts, UTXOs, and then the volume. And you can also put realized value in there. We often talk about realized profit and loss. That's kind of are the transactions that are on the move carrying a lot of volume weight. If they're not, it just helps us color and understand that this looks a little bit different to our classic bull market where you've got high fees, lots of exchange volume, lots of people trading in and out. At the moment, we have a lot of those things, except we don't have the volume. We don't have the exchange activity. We don't have the coins moving around. It's being driven a lot by these inscriptions. So it's kind of one of these things we have to start thinking about this from a little bit more of a dynamic lens. It's not quite as binary as it first seems, but hopefully today gave you a bit of an insight into how we can analyze this. So anyway, thanks for tuning in. If you've got any questions, you can reach me in the comments, and I will see you in the next one. Cheers.